Hello, hello, hello. Today is the 10th of December, 2024. We have a special treat. We have market expert Rod David. He has a presentation for us. Rod, the floor is yours.
Awesome. Thanks very much for having me. I appreciate it very much. And for letting me actually just show what I do and what I look at, what might be a benefit to some of your followers. VidiTrade is basically a technical analysis, day trading site focused on ES. And we look at other coverage for sure to have at least a ongoing current opinion on any other market, anything that's going to be of interest or incidental to trading ES. But primarily, I come into the day with two different approaches. One is my bias parameters, and the other is my inflection points. And bias parameters are published twice a day. Very simple. Once you understand, really what we're looking at is false breakouts or not. So if I have a level of interest, somebody says, hey, you got to buy this stock or you got to buy this market above X. Okay, it's above X. I buy it and then it drops right back under X. What was the point of that? It's really like one hand clapping. So if it's one thing to cover or recover or break relevant price, it's another to do it and maintain it through a relevant timing window. And that's where the key is. That's the second hand clapping. And that's the basis for bias parameters. We identify the relevant levels. We identify the relevant windows. And then we assess whether the test was successful in that window. And there's a variety of rules that will tell us what to expect of it because of that. So for instance, the green lines, you can see the green bold lines. These are dailies. There's the morning bias up is green, bias down is red. The nearby levels are the signals, and the extremes are the targets. Just to give you an example, here's the dashboard that subscribers log into. And go down to the bias signals. So this was this afternoon's bias. That is, this afternoon, if ES were above 60.71 at 120, it would have put into play 60.85. If at 120 ES were under 60.56, it would have put into play 60.38. And these are relevant levels anytime. They're just highly reliably influential and likely when they're triggered on a timely basis. So you can see we definitely probed under 60.56, but it was after 120. 60.56 is this bias down signal, this afternoon's bias down signal that, here I'll get more granular on it with a 1 minute, that at 120, when it mattered, wasn't being triggered. Price extended down to it, and until the bias window lapsed, the afternoon bias window at 2:30, until it lapsed, the bias down signal held pretty strongly as support, but it could hardly wait for the bias window to lapse, and then immediately extended down anyway. So we know what's going to attract the market. This yesterday morning, the bias down signal was 60.88. It was probed at 10:15, putting into play its bias down target at 60.70.84. Took a lot of time to break through it, but once it had, it was just pretty much a single-minded market. That's not always going to be the case. There are deviations like this afternoon, this morning, which went out at 10:15. That's the trigger for the AM bias. Went out testing the bias signal at 10:15, still overlapping it. Grace period invoked. There's the grace period was invoked, and at 10:30, it was still overlapping it. So didn't even trigger or reject the trigger. That tells us that we're likely just to range sideways. We just range sideways. So it's indicative of behavior. And a bias can be put into play and not met and be left outstanding. We had a long-standing outstanding objective at 60.44 that had been left outstanding, and it was met today. It's an attraction that we just know. We're coming back to it in all likelihood. But that's not on the bias signal. That's just one aspect. Another aspect is just the inflection points. Now, I calculate the inflection points early in the day in the heat of the market. I'll be a little more short-handed and maybe a little more direct in what I'm looking for. For instance, coming out of the open, just a quick word about the open. We all hear, don't trade the open, stay out for the first 15 minutes, half hour, why even bother showing up? The point is, it's so volatile, it can rip your head off. And so it's a pretty great beast to be able to tame, I thought, and created a set of indicators that can give us, more often than not, can give us immediately actionable setups for coming out of the open. And that's, if you don't mind taking the or if this is part of your trading plan, to have a quick scalper's approach, we can get some pretty consistent, or have the opportunity at least to have some pretty consistent quick moves. Today, for instance, coming out of the open, because of this setup, which I'll also digress a moment, I have a library of setups. This is the VidiTrade knowledge base. We have a library of setups that, get this window back for us. These are the setups. There's actually an entire library of them, but there's 5-stager is one that happened to trigger this morning. A lot of background documentation. I say a word, you can go look it up and see all these historical references to it having developed previously. Compare it to current price action, be that much ahead of what to anticipate. But here's a 5-stager. It's a running correction, entered aggressively, exited aggressively, plateaued. At this point, we know that at some point, there's a high degree of likelihood we're going to come back into the lower quadrant of this running correction. Basically, the 61.8 retracement between its last two touches. 60.63 was our target on a pullback. Occasionally, this 5-stager will go back to the stage 1's origin. Took a while, didn't have to, but it did eventually get down to 60.58 and, of course, lower. But this is the inflection point. So I keep the inflection points labeled on the 1-minute chart, bias parameters labeled on the 3-minute chart, and usually they display like this. But the 1-minute chart's inflection points have a very specific trading tactic I call the 3x3. 4x4 during the first hour to account for noise. 4 ticks, 4 minutes. I identify the inflection point, I do the hard work, you count to 3. That's the deal. So, for instance, if, and by the way, any short line, blue, green, red, I don't see any red on here today because we didn't have any buy signals for pullback limits. But the pullback limit, the signal, these are all inflection points. And whenever price crosses at least 3 ticks, we start a 3-minute countdown. And that 3-minute countdown identifies an extreme that we don't know until the end of those 3 minutes, or even later. Is that going to attract reinforcements beyond those 3 minutes, whatever that 3-minute extreme was? Or is it the usual attention span of weak-handed counter-trend sponsorship? And based on the context, if it's a signal, we'll look at it, we'll treat it one way. If it's a bounce limit or pullback limit, we'll treat it another way, and I'll show you one of the more profitable ways that it's useful. But that's just the general basis. We were talking about the bias signals. Bias signals are at the basic understanding of a bias signal is buy here, but maintain it through this window. Or if it tries and fails by the end of that window, it can be interpreted in the opposite direction. This is kind of that. It's a different way of identifying weak-handed counter-trend sponsorship. So, for instance, here's a sell signal that triggered 3-minute low, identified at 60.59. As soon as that's broken, we know there's reinforcements arriving. You as the trader, you're free to execute wherever you want. I know traders I work with, their trading style, they'll scatter shot micro minis on the first probe of the signal. If they get the opportunity to add more while fluctuating around within certain parameters, upon reinforcements arriving, get maybe a third or even fourth unit out there. But then what happens if we want to ride this down? They're not also immediately productive, and sometimes they're even more substantially productive. How do we know to stay in? Or, for instance, at some point, you as a trader might have curtailed your position, reduced exposure, lightened exposure, in other words, tightened your stop and gotten triggered. How do you know when to get back in? Well, here's a use for the inflection point, the bounce limit in this case. And that is, we count down, it's moved over here. We count down the first, as soon as there's a 3-tick probe. And again, I'm providing these lines. No work on your part. So we count down the 3 minutes of a minimum 3-tick probe, 1 or 2 point buffer, room for noise. And we know anything higher is violating the bounce limit. Anything higher is violating the bounce limit. What an attractive short entry. We don't even need to know that it's resolving down. So long as we've got a system that generally resolves, then we're able to, over time, as long as our entries are so close to where we know we're wrong, the loss is that much more limited, that you can do these all day using the 3x3 test, and the theory is you do okay. You get back in, you know where to get back in, you know where your risk is reduced. We have one working here into the close today. Kind of worked out, it didn't work out, but it did work out. There's a bounce, 3-minute test, 1 or 2 point buffer, room for noise, can sell it all over here. Does it ever return to the low? It actually doesn't. Does that mean it's unprofitable? No, not if you're trailing a stop or selling into weakness. Why would you sell, or covering into weakness? Why would you cover there? Because this is the 61.8 retracement, the lower quadrant, between those 2 price points, right into it. So you might have tightened stops or lightened exposure depending on your strategy, but certainly need to be stopped out. Well, we don't have to be guessing the future. We have to be guessing kind of what the herd mentality is guessing the future is going to be. And they don't always have a common guess, and they'll never all be in unison. But as long as we can pick up on the general bigger directional moves and trade the most of it earlier to later, that's where the money is made. So you probably know that today and tomorrow I'm inviting you into my YouTube room to watch this in real time. I told visitors this morning that it's just for the morning, that this afternoon, based on this pattern, this is another setup. It's an alternation rule setup. I won't describe it right now, but it's the kind of thing you would learn in the room. The alternation setup said, because the morning qualified these specific characteristics, the afternoon was likely to include relentless trending. Whichever direction, we just know because of this, we're going to get this in this window. And it could have been in the opposite direction. That's based on other factors. But once it gets going, we know because of the basis, we're going to give it some leeway. We're going to have the confidence to know that, to press our bets, to, if not tighten stops, loosen stops, then be that much quicker to get back in if stopped out, whipsawed out. But that's open tomorrow as well at youtube.com/@VidiTrade. At Vidi, like you see in Latin, VidiTrade. So just log in. You don't even need to log in, I don't think, as long as you can get onto YouTube. Search for this. It's all morning. It starts at 7. We do a strategy planner at 7 a.m. You can see the recording later if that's not convenient, or ask questions if you're there in person. 9:15, 15 minutes before the opening tactics, we look at any immediately actionable setups like this. These were outlined, pre-open and post-open. And also see what might have shaped up since 7 a.m. And I'll repost the link to this if you're interested in saving. I actually went back to several people actually subscribed today so they could be involved in the afternoon. I've already gotten back to them. I'll let you know as well. I'm adding an extra term to the free Vidi room, just out of appreciation for this referral, for letting me get in front of you. I hope in the future that we can do this again, and I will, at that time, share analysis as well. Why is it, for instance, that we knew that Thursday and Friday were showing signs of weakness, that X needed to happen in order to avoid Y? X didn't happen, by the way. Y did. Breakout from Monday, Tuesday, not confirmed. Passive bearish for 2 consecutive sessions, despite higher highs and higher lows. There was a pressure point coming one direction or the other for sure. But if you come into the room, strategy planner, 7 a.m., you'll get the most up-to-date analysis of where the market's at, where it's likely headed, and how to trade it. So, Jeff, thanks so much for having me on. I appreciate it very much.
My pleasure.
Hope to see everyone at the YouTube room tomorrow.
Rod,
Jeff,
thanks for
see you
everything.
soon, too.
Yeah. Rod, thanks for everything. You have great stuff. I've learned a lot from you, I have to say that. And I hope people sign into your room tomorrow.
You're a true gentleman. Thank you, sir.
Bye-bye.
Have a good night, everyone.